All right, let's talk about a feeling every single one of us in the market knows. That pit in your stomach when everything is just in free fall. But what if that chaos, that sea of red you're seeing, wasn't actually the enemy? What if it's just the price you have to pay to play the game?
So you open your phone, right? And the first thing you see, boom, Bitcoin is down.
You keep scrolling, and it just gets worse. ETH is tanking. Everywhere you look, it's the same story, a total bloodbath. And then, like clockwork, the social media posts start to pop up. This one feels pretty familiar, doesn't it? That feeling of just complete and total surrender.
Oh yeah, we have all been there. Your entire feed is just on fire with screenshots of liquidation emails, panicked posts from people who, like a week ago, were tweeting about diamond hands. It's an emotional roller coaster, and it is absolutely brutal.
But here's a really powerful idea I want you to consider. What if all of that chaos, all of that red ink, isn't a sign that the system is broken? What if it's the system working exactly like it's supposed to? You see, this one little shift in perspective changes everything. Volatility isn't some bug in the market. It is the market.
Think about it like this. For a chance at those life-changing returns, what the pros call asymmetric upside, you've got to pay a price. But that price, it isn't paid with dollars and cents. It's paid with your nerves, with your patience. That price, my friends, is volatility.
And this is the absolute core of what's happening. During these incredibly intense periods, a massive transfer of wealth is taking place. It's flowing away from the people who react with their gut and into the hands of those who act with a plan. You know, the wild swings we're all seeing today, they can feel completely new, totally terrifying. But the truth is, they're following a script that's been playing out for more than 100 years. I mean, look at this. From the dot-com bubble to the housing crisis, the emotional journey is almost identical every single time. It kicks off with optimism, shoots up to total euphoria, and then the crash. It comes down into panic, and then capitulation. That's the I'm done phase. And only after all that does the long, slow climb to recovery begin. This pattern, it's timeless.
Here's the kicker, though. Crypto isn't telling a different story here. It's just telling the exact same story, but on fast forward. The emotional highs feel higher, the lows feel way lower, and the whole cycle is just compressed. It's the same human psychology, just supercharged.
So, okay, if we can accept that volatility is a feature, not a bug, then the next question is, how do we use it to our advantage? Because the real juicy opportunity is born right in the middle of all that chaos. Just think about it for a second. If an asset's price only went up in a nice, neat, predictable straight line, there would be zero chance to ever buy it for less than it's actually worth. It's the fear and the panic that cause prices to totally disconnect from their real fundamental value, and that's what creates a window for people who can see past all the noise. And this is exactly how that wealth transfer we talked about actually happens. Step 1. Widespread panic drives prices down, way down. Step 2. The impatient and emotional traders sell just to make the pain stop. And then, step 3, the patient, strategic investors, they step right in and buy those exact same assets at a massive discount. So, how do you make sure you're that strategic investor? Well, it all comes down to a really fundamental shift in your thinking. It's about changing your time horizon, for sure, but even more importantly, it's about changing the questions you ask yourself when the storm hits. When the market is bleeding out, your emotional brain, your lizard brain, it immediately asks, oh my God, how much am I down? It's totally focused on loss. But the strategic mind, it asks a completely different question. It asks, what amazing assets just went on sale? That single shift, it can change absolutely everything.
I mean, just look at the difference here. The emotional trader is thinking in weeks. Their main signal is just short-term price movement, and their action is to panic and sell. Now look at the strategic investor. Their time frame is years. Their signal is the underlying value of the asset, and their action, to accumulate. It's a completely different game.
Now hold on, this doesn't mean you just blindly buy up everything that's in the red. Of course not. The strategic mindset means you have to tell the difference between temporary hype and projects with real, durable, long-term mechanics, things like built-in yield or genuine scarcity. It's really about finding assets that are built for conviction, not just pure speculation. The source material actually points to projects like Pulse Zen as one example of this kind of thinking.
And all of this brings us to our final and honestly the most powerful way to reframe what all this market chaos really is. It is not a pit that you fall into, it's something you can actually choose to climb.
Let that one sink in for a minute. All the red charts, all the panic, all the noise on social media, it isn't just random, meaningless chaos.
It's the latter. It's the very mechanism that allows the strategic investor to climb rung by accumulating valuable assets from those who let go out of fear. It's literally the engine of upward mobility in the financial markets. And that's really the ultimate question that this whole cycle asks every single one of us. The opportunity is right there, but it demands patience, it demands conviction. The climb belongs to those who can hold on through the storm. So the only real question left is, will you?